Hello there, Maverick traders. This is Rob Reinhold. It is May 6, 2025. Let's jump into it. In this session, we're going to be talking about what happened during the day. We had a pretty tight candle today, just like we had a tight candle yesterday. I don't really love the markets here, so I've only got one potential bull and one potential bear, and I'm not even too excited about those.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, today we had a pretty tight candle. We'll take a look at the candle, but if we take a look at the headline numbers, we see the Dow down almost 1%, the S&P, the Qs all down about 1%, but pretty much all of that happened on the gap lower. The big moves today were in oil and gold. Let's talk about oil for a bit. OPEC came out over the weekend and they increased their production. This is happening at a time where oil prices are already really low. So increase in production is going to push prices lower. We're already to the point where drilling in the US probably is no longer all that profitable. So we're going to start to see some domestic production probably cease here. But allegedly the story is that OPEC is really trying to punish the members of OPEC Plus that have been pumping too much anyway. Kazakhstan and Russia have been overproducing based on their agreements. So Saudi Arabia basically said, hey, you know what? We're going to push the price down for everyone and make it really painful for all you smaller people. That's what's happening and going on. Low oil, I know we all will love low gas, but listen, you don't want it too low because that is not good for an economy. Dollar was weak again today, so gold shot up. Gold has been very resilient. I thought gold would actually head lower here as the market stabilized, but gold's having a nice bounce back to the upside. As far as news goes, we had Palantir earnings last night. Palantir is an AI play. They beat earnings, raised guidance, and yet the stock dropped. Why did the stock drop? Well, Palantir is currently trading at 483 times earnings, but you think, oh, that's outrageous. No. It's trading at like 84 times sales. That is the outrageous number. So look, it was priced to perfection. It really doesn't mean anything. The stock dropped about 10%. Not a big deal. We got the trade deficit. We usually don't talk about the trade deficit, but there wasn't a whole lot of news out today. We got the trade deficit. It increased because a lot of companies are buying things in advance to try to beat the tariffs. So that means a lot more imports coming in than normal. That's going to affect the trade deficit. Definitely a temporary manner at best. Let's take a look at the charts here. And I want to focus on these last two candles. Look how tight the ranges are on these candles. Basically, we gapped down yesterday and we didn't go anywhere. Today, we gapped down. We went up a little bit, went down a little bit. But you can see that there is really, once the bell opens, there's not a lot of price action here. And we're ending just where we closed at. If we come over to the Qs, we actually see a little bit of buying. Yes, we've had two down days, but the down days have been up days where the stock market or the Qs gap down and close higher than the open. Gap down, close higher than the open. Pullbacks with green candles are great signals that the buyers are still there. Ultimately, we still have a whole lot of room to get down to that 50-day moving average, which is the test. If it holds that 50-day moving average in that 5,500 to 5,600 range, then this market is going to be just fine and likely going to stabilize, go sideways or a little bit higher. We'll have to wait and see. I don't know at this point, but these candles are telling me that the buyers are still there. People are still out there looking to grab some things on the bottom. Take a look at the heat map. We can see that there is some intensity here in healthcare. Huge day down in healthcare. And then take a look at utilities. Utilities look really good. And when I was looking for trades, I had pretty much nothing but utility stocks on my buy list. So I like that sector. I think it's going to be good. Nothing has changed. Nothing has changed. Yes, we had that monster rally off the bottom. Here we are. We're tipping over a little bit, but there is no big red candles telling us to be worried about it. I'm still pretty much a 0 to a +0.5 to a +1 That's really where I'm looking here in this market. As I said, I've got a lot of utilities on this list and came across VST. So VST is Vista. It's a utility company. You can see resistance here at this 134. We're now above the moving averages. We're about to get that 2050 cross. And we don't really have any resistance until about 170. I'm not saying I think it's going to 170, but what I am saying is, technically speaking, this has everything we like. We had a gap up. We had a base, and look at this. We've got a move to the upside. We do have earnings before the bell tomorrow. So, of course, this thing is not going to open up where it is. If it's gone up too much, then I don't want to chase it. 150 for me is that little sweet spot target. If I can get him for like a 145, 150 bull call spread, I think that is a very reasonable trade here on VST. There are other utility stocks out there that also look really good. I vacillated between this one and GEV for which one I should show you. But if the sector works, everything's going to work. And if the sector doesn't work, nothing's going to work. All right, here is Abercrombie & Fitch. This has been on my short watch list for a while here. And you can see here, it's not falling apart. As the market bottomed out, you can see we're just getting rallies, sell-offs, rallies, sell-offs. I like to just get in on stronger days on this. Not that this was a strong day, but we gapped down and recovered. Ultimately, we have this low base from, let's call it 67, all the way up to maybe the high of 75. Yes, I would love to be more short up in this area. And if we get a little bounce here for the rest of this week, anywhere in that 71, 72 area for a short, I think is just a juicy one. Ultimately, this thing probably does break down. We've got descending triangle action. Everything's telling us it's going lower. We just don't know when. This is where I want to get into a trade. If we are more bearish, I'd love to do like a 60-65 bear call spread and go out maybe to all the way to June options expiration, giving me 5 full weeks for this thing to break down. But I don't want to be that aggressive on short, so I'm probably looking at something like a 65-70, even an at the money. It's at 69 right now. A 69.72 would just be, you're not asking it to really drop much. You're just saying, I don't think this thing is going up, because in all of the bullishness we've had lately, it definitely hasn't. Let's talk about tomorrow's price action. I've had this here for a little bit. Base pullback back to 5,500, likely to test support. And that's where we're moving down to that point. But we're moving down to that point on lower volatility. I think we're going to see that point hold. I do think we see that hold. That is just my opinion. That is absolutely my opinion. And I've been wrong a lot in my career. But the price action is looking like that's what it's showing right here, right now. It doesn't look like there's any panic or fear at this point. Of course, we know in this environment we have a president that tweets out things and that things can change. But at this point, I don't see really any panic here, any reason to think that that support isn't going to hold at this point. We do have the FOMC tomorrow, 2 p.m. Eastern time. Of course, we always expect that FOMC meetings will bring volatility. Maybe that brings some volatility. If the Fed says something to really spook the market, then maybe that 55 doesn't hold. But if that Fed doesn't spook the market, I think that's more evidence that that 5,500 is likely to hold. I am not bullish. Do not get me wrong. I am not bullish. I'm just no longer bearish. Market's either going to go sideways or higher. I don't know which one. We'll have to wait and see. This is the Market Roundup. Thanks for joining me.